welcome to today's fast video, which is called FOMC and S&P 500 range. Are we going to see an upside or downside breakout of this latest tight range consolidation? Let's dive into the data. I'd been talking that US dollar had been the key defining factor Monday and yesterday as well. We had seen a decline. It did not coincide with stock market upswing. So is that about to change or not really? See the steep hit to DAX that had been the result of Merz being or not being the chancellor. Thus far, markets are quite sanguine about the resolution, and it ties in well with international money leaving the United States, and it can be seen as well in the US dollar, which is thus far losing its feet to return back above the crucial 100 to 101 level. So much for the anatomy of headwinds and tailwinds behind the stock market in the States. Such is the weekly chart. No reason to panic. Inside candle in progress, and would you say that advanced decline line and advanced decline volume are getting primed for an upswing, or they are rolling over? These are the two leading hypotheses, so let's examine further clues. What's your impression of the daily candle? Is it an upside resolution in the making, or we are going to cut back into prior week's midweek range with the stark daily reversal, which had been the only lower knot daily candle seen there latest? FOMC, is it going to stun or not really? It's about reading the tea leaves and how it fits the expectations for the Fed to do precisely nothing. Such is the hourly chart, which clearly reflects the dynamics of the excitement over watching the paint dry. So we are seeing a very tight range. We are back at the Friday's non-farm payrolls announcement level, and there are very mild differences when it comes to S&P 500, Nasdaq and Russell 2000. It is kind of tipping the scales as to the reaction of what the market is going to do following the Fed announcement and, of course, the volatile conference. The daily perspective and what the sectoral view says is that we have had another risk-off day. However, has it been characterized by a steep downswing? Well, not exactly. You can see that the sector hit hardest, healthcare. It is belonging among the very top sectors in terms of S&P 500 rating. It's within the top 4. So that of course cannot be outweighed by utilities upswing. However, this is a risk of daily perspective. However, S&P 500 as such, when judged in the context of daily candles and upcoming macroeconomic data, allows for, in light of Saturday's video where I talked the possibilities of how to approach the periods of contracting volatility going into major data, major announcements, expected headlines. That's up to each of us whether we want to position ourselves ahead of the data or not really, and are content with grabbing only a chunk of the movement. 5-day perspective is not giving out that kind of a risk of view, so well worth noticing. Again, healthcare is the one under pressure, and understandably so. So, this is kind of closing price action is reminiscent of Thursday's close and the bearish positioning going into non-farm payrolls. However, FOMC is comfortably during the day, so much for the caution before the close when institutions put their money to work via market on close orders. We can see clear risk of positioning at the close following semiconductors twice taking on and twice closing the bearish opening gap. This is a sign in itself. Will it be invalidated the way it was Friday? Always to surprise. Further close offer volatility metrics. Is this kind of a reversal to the uptrend in weeks, or just dialing back of latest letting out of the panicky air, as there is increasingly more and more certainty, meaning less of a negative surprise risk when it comes to the tariff picture. That would help explain, looking at the same chart, when it comes to it as a ratio with forward-looking wicks involved. And this is painting still a reasonably tame picture of no risk, no panic. Still, this is very cautious and rotating there and back. And this is the view how it must be considered when it comes to sectoral perspectives. Bitcoin. Winning play, seeing inflows, no surprise, sticking with this winner for some time. Precious metals, another one where the upswing has to be respected, however sizable upper knot yesterday, so time for caution. Trading signals clients know how to approach it in terms of trading in and out of gold. When it comes to oil, we had seen indeed the predicted push to take on and overcome $60. Thus far, it is being quite unsuccessful, and of course, I have been adamant that the risks in oil are still skewed to the downside, no matter the positioning when it comes to futures contracts. Once again, revisited this video with the preparations of how to approach news announcements when it comes to volatility contracting.